Lesson one, what is a company? Now, there's information, readily available all over, as you're looking at the screen, Google. It's not hard to find information about stuff like this, common ideas like this, like what is a company. As you can see on Google, it says a company is a legal entity separate from its owners or shareholders, formed by one or more people to conduct business, most of the times make a profit, or sometimes they're non-profits too, and achieve common goals by selling goods or services with features like limited liability, distinct rights to own property, to sue, to take on debt, and it's usually managed by a board of directors. It's a formal business structure, and it's distinct from sole traders or partnerships, allowing for easier ownership transfer and professionalism, but involves higher setup and admin costs. Okay, so you wouldn't be watching this if you wanted a unique perspective on day trading and the concepts involved, right? So I'm going to try to explain what a company is in my own words, as someone who has incorporated more than once in the past. Now, essentially, a company is it's like it's a file. There's no physical it's not tangible. When you form a company, it's not a tangible entity. It's a legal entity. So basically, it's a file in a cabinet, right? And usually a company exists to acquire financing. So if, for instance, you come up with a brilliant business idea, a unique lemonade or a unique tea, but and it's profitable, you can sell it for profit, people, there's demand for it. However, you do not have the capital required to expand. You might need to bring in equipment from China. You might need to purchase inventory from another country. So you might need 3, 4, 5 million to set the business up, in the way you envision it. However, while you have the knowledge and skills as it relates to the business, you may not have the $5 million that you need to purchase equipment. So typically what you would do, you would, approach an investor and say, hey, I have this business idea. I believe it can work. Let me show you my business plan. Let me show you my recent financial statements and so on. And the investor would say, hey, I think this could actually work. If I invest, 5 million within 3 years, I'm going to get my 5 million back and plus some dividends and hopefully some appreciation in the value of the business and so forth, right? So what you need is in situations like that, you need a formal structure that says, hey, the investor owns this amount of the business. I own this amount of the business. I am responsible for this. The investor is responsible for this. There will be a board of directors with 5 persons, a manager. The operating team will have, this, bam, bam, bam. So everything is basically spelled out. Everything is well structured. If the business fails, then neither you nor the investor will be responsible personally for the debts of the business and things of that nature, right? So the first idea that we need to understand is what is a company. I hope this gives you a better idea what a company is. But however, feel free to do further research on YouTube, Google, what have you, if you need to get a deeper understanding, right? But in a nutshell, a company is basically a legal entity. It's registered with your state, and it typically has its own tax identification number and everything like that. You can open a bank account. You can own property. You can everything pretty much that an individual is able to do, right? So some examples would be like Apple Corporation, Google, Microsoft. These are large companies. However, there are also small private companies. That there might be like a doctor. You might put this as a company, or a small family supermarket and things like that, right? So that's the first thing they need to understand is what is a company. Okay, so that was lesson one. Now let's move on to lesson two.